welcome to the Trade Finance Distribution Initiative podcast, where we bring you the brightest minds and the boldest ideas in the trade finance industry. I'm your host, Doris Kononowicz, and today we're very thrilled to have with us a special guest. Joining us is Baihas Baghdadi. He's the CEO of Trade and Working Capital TWC, a leading provider of innovative trade finance solutions. Now, you may know that TWC has been in the industry since 2019, with its tailored solutions and offerings in strategic partnerships, with a recent expansion even into the US market. So in this episode, we'll be exploring how TWC is bridging trade finance gaps for mid-sized businesses specifically, and its visions for the future. Welcome, Baihas.
Thank you so much, Doris, for having me.
We're really lovely to have you, and welcome to the TFDI. You're one of our latest members that joined towards the end of last year, so really good to have you on board as well.
Thank you for the opportunity.
All right, let's start with a little bit of an overview of TWC's mission. What gaps in the market did you see before deciding to set up the TWC?
I think I've been in banking for 25, 30 years, as you know, Doris, and most what I've seen during that journey of 3 decades is that most of the banks are very much focused on risk-weighted assets, on risk concentration, on their own limitations whatsoever in terms of as an organization. And as you know, from after the financial crisis a few years back and the collapse of Lehman Brothers, the bank became suddenly extremely limited to provide financing to the corporates. They have been, most of them, especially the foreign banks in the foreign markets, they have been very much specialized in the big multinational corporates, in the mega corporates, and providing financing to them and helping them to grow their business. Nevertheless, there was massive amount of middle and small enterprises that were left behind. So this is exactly what I looked at when I left. When I stopped working in banking back in 2018. I looked to myself and I said, I need to come with something completely different. And what I'm talking about different is adding value. Hey, listen, what we are doing today in TWC, and we will talk about it later on, but it's no different to what the banks are doing. Nevertheless, I'm providing financing to corporates that today don't have enough funding coming from their own banks in their local markets.
What kind of clients specifically are you interested in working with?
I'm working with the mid-corporate today. This is my sweet spot segment. I'm talking about corporates from all from 10, 15 million euros up to 1 billion euros.
And how are you sourcing liquidity?
Well, that is an interesting question. When I started it, I had to go to my family and friends, and I raised my first 20 million euros. And probably, after COVID and after the Green Seal collapse, where it was very difficult days for all of us to raise funding, I would say that today we are sitting in a massive pool of cash coming from institutional investors. Those institutional investors are mainly insurance companies, pension funds, and private funds.
And you did say something important, that you're not doing something specifically different from banks. Banks tend to give you some sort of a coverage when it comes to risk exposure because you sort of know what the bylines are. What are you finding are some of those risks that you're needing to mitigate, and how are you managing them?
I think we positioned ourselves as TWC as the second call. The banks are the natural first call. They got cheaper funding, they have bigger infrastructure, and you have to rely on them. At the end of the day, we need banks, to route our cash, the payments, all that stuff, KYC, anti-money laundering. I think the banks are a massive institution that we need them. And this is why I didn't position the company as an alternative lender. I am a complementary lender. This is what I do. Now, to your question is, today, the banks are, the way the banks analyze a receivables finance transaction where I'm sitting today, it's so different to the way I'm looking at it. And trust me, Doris, during my days in banking, I tried hard with the risk departments of the banks to understand that the receivables finance business has nothing to do with the loans or the mortgage loans. Everybody will tell you, hey, listen, I understand there is a difference. Nevertheless, from risk assessment perspective, from risk concentration perspective, and from an approval perspective and limits providing, financing providing, real cash providing to the corporates, I can tell you it's so limiting. Now, I believe that because the banks went all through the journey of having to standardize to get economies of scale and to become profitable, because to be fair to them, most of them has been struggling to be profitable. Nevertheless, when it comes to a real trade transaction where you have an invoice of 90 days, 120 days, the risk assessment you do to that transaction has nothing to do with a 10 years mortgage loan. See what I mean? So I think my approach was, first, I need to bring cash to my clients from sources that today a mid-corporate sitting in Spain, in Italy, in France cannot access. When I'm talking about insurance companies investing in our funds, that tells you that today a Spanish mid-corp sitting in South Spain or in South France cannot get access to this type of institutional investors. Now, the risk assessment I am doing today, when I'm analyzing a 90 days transaction, I'm providing them with the real nature, with the real risk assessment of that type of risk. And then there is enough tools, and as you know, and everybody knows, there are enough tools in the market through credit insurance and other type of ECAs providers that could mitigate those risks. Nevertheless, I think the banks today, while they are using part of that available mitigation, nevertheless, they struggle when it comes to certain economies and certain geographies.
What's been, I think, the most challenging aspect of kind of generating and running this business? You said it's complementary. Has it been, the adoption, sort of speaking to your clients of how you're complementary? What has been, what in your opinion has been the biggest challenge in getting it off the ground and, getting that adoption from your clients?
So to be honest, the clients have been waiting for us. To be honest, I didn't struggle that much to originate business. Nevertheless, I struggled at the beginnings to raise funding. So to your question, the clients were waiting for the solution. The client were waiting for the funding. And trust me, when you got the flexibility to provide them with funding in less than 48 hours, the pricing is become less an issue. The technology become less an issue in the conversation. Most of those, new fintechs that we have been seeing over the last 20 years, they have been, the strategy was, hey, listen, we have the greatest, the brightest technology. Nevertheless, I didn't position TWC and HBC in the US as a technology provider. We are not a technology provider. We are a boutique, a factoring boutique, a receivables finance boutique, a selective receivables finance boutique, where we will be analyzing your transaction, we will be analyzing your risk in less than 24, 48 hours, and we will provide you the funding in no more than those, 48 hours. I think that is when you start making a difference, because banks, unfortunately, today, it's, they have like a big engine of KYCs, AMLs, and risk assessment, onboarding, account opening, and all those massive processes that made the business very difficult for the corporate to access to that funding.
Very complex as well. Yeah.
Indeed. And to be honest with you, I have to fulfill exactly the same rules and regulations as a bank. Nevertheless, because I'm focusing on just one product and one type of activity, I have the flexibility to go very quickly. So I ask for the same documentation as a bank asks for to fulfill the KYC and AML regulations and on the onboarding process. Nevertheless, in my case, because I focus just on what is needed, not on that what we would like to have, is where I would say the motivation is the client with the client is different. I think the client's motivation, because he know that in 48 hours he will get funding, I think they provide us with the information much faster, and because we don't ask them for a complex technology adoption, I think that helps very much. Hey, listen, if you are a businessman, you are a small shop, you are a 50 million euros or $50 million company, and what you need is to expand your sales. You don't care about the technology. You really do care about getting the funding immediately. So that is the key differentiator from my perspective. So for me, technology when I was building this business back in 2019, I said to myself and to my team, technology should be an enabler. It should not be, the main key focus of the conversation. Because if the client cannot adopt very quickly to our technology, we have to find the right way to receive the invoices and the applications and fund the client very quickly. You need 3 weeks to adopt our technology. No worries. In the meanwhile, we will provide you with funding. That makes a difference.
That's very fascinating because a lot of people in this space want to lean very heavily on technology and the advantages that it has in the ease of access to business. We'll talk a little bit about that in the future. But at the moment, you did mention, expansion, and a proof point to that is expansion into the US. And I believe 2023 with Higher Bridge. Why the US? What were the opportunities that you found that this new venture presented?
To be honest with you, Doris, I started in a different way from my competitors. I started from Spain. Why Spain? Spain is my backyard. Everybody knows me. I started my banking career in Madrid, and I know the clients know me, and I was very determined when I built this business that I want to have a profitable business. I want to make sure that I am making money every single day, because going in rounds and rounds of equity rising, of shareholders rounds doesn't make any sense to me. I want it to be clean. I want it to be very fast in my growth. So I put I put my all my energy behind a country where I know that I will build the portfolio very quickly. Then when I looked around me in the environment, and I say, okay, now where I'm in my backyard in my home country, now I'm successful. I'm number one non-bank financial institution providing working capital solutions to the client. Now, where are my next horizon? And when I looked around me, to be very honest with you, in the EU today, as we stand, I didn't feel that it's the right moment. Not for France, not for Germany, not for Italy, where I should be. It's my natural growth. So what was the alternative? Given the Eurozone, limitations and all the struggle of the German and French economy over the next 2 years, I needed to build something outside my comfort zone. And outside my comfort zone, the next natural market, because of the size of the opportunity, was the US. So we went to the US back in 2023, and we started building up that business. And our target in the US is so different to the target in Spain. So in the US, we said to ourselves that we want to be the first non-bank financial institution in providing financing of all the trade flows between Spain and the US. We want to be the first non-bank financial institution providing financing for all the flows and exports from LATAM to the US. And we want to target a sizable amount of the mid-corporate US to US business, the domestic business. And that was when we started looking at the business case. It made perfect sense to us that after Spain, we should go to the US. That being said, Germany, Italy, France, and the UK are in our roadmap.
What has been your experience working across these different jurisdictions? Has there been, not surprises, but have you had to adapt the way you work to this certain market as opposed to how you'd work in Europe?
For sure. I think first, Spain was an easy win. As I said before, it's like, you knew the laws, the enforceabilities. Remember, in my Barclays days, within all my big mandate I was privileged to be the chairman and the CEO of Barclays Factoring in Spain. So everybody, knows me. I know everybody. And the regulation was very well known to me. Nevertheless, when we started in the US, the adoption process took me like 12 months. And this you can understand why between November 2023 and November 2024, when we started landing deals, all that 12 months took me just to understand the dynamics of the different states, the enforceability laws, and all the legal aspect of that economy. It's fascinating, to be honest with you. When you are going to a new jurisdiction and you are completely out of your comfort zone, listening to all the legal advisors, the tax advisors, and the consultant we use to build our business, how different is the US from the rest of Europe? Of course, it's different.
And that brings me to what we were talking about, technology, right? So, because this is where it can do a little bit of its magic. A lot of people use it for onboarding, KYC, AML, but also it could be used for risk factoring, risk assessment. How are you currently using that bit of technology, if you are, to streamline trade finance processes, especially for credit risk management and any operational efficiencies that you might require?
So having said that, technology is an enabler for our business. It's not the business itself. It's not the heart of the business. That being said, and being very clear about it, technology is so key to us. Because at the end of the day, we have to keep in mind that we need to provide funding to our clients. We need to have, our ERP feeded with all the accountings, the tax, and all that stuff. And the most important piece, which we should not forget, is how you communicate with your investors. Because your investor, Doris, wants to know what's going on in your portfolio, what are the delinquency ratios, how you're, on a deal-by-deal basis. So definitely technology for us is key. We started building the technology from the basics, which I mean, we developed our own technology, but using external standardized programs or products. So we have taken 2 or 3 products and we mix them together, and then we do some customization to adapt it to our business model. That is for Spain. Nevertheless, when we went to the US, we started realizing that some good improvement need to happen, and we did that as well. And after 5 years of success and having providing 1.5 billion of euros in funding to SMEs, I can tell you today we are embarked in a very big IT project. So we hired one of the most reputable global IT management, IT management, and this consultancy firm is doing for us 360 review. So what we have today, where we want to be, 4 or 5 years down the road, and what actions need to be taken. That being said, Doris, I am very determined, and having been working for banks all my life before jumping into this, personal project. For me, I am a businessman that wants to buy technology. I'm not gonna develop a technology. So I'm gonna build a technology or a conglomerate of technologies, buying best-in-class existing technology, but having a look at what's going to happen in 2029, 2030. That for me is key. And this is why I'm spending so much time in today's in today's business days. For me, in my business hours, I'm spending a lot of time on the technology build up. So we have a great technology. It has proved to be the best technology, having financed 1.5 billion without any single incident from a technological perspective. Yes, we have the right technology. It's scalable, yes. Nevertheless, for my personal ambition on a global basis, I need to be open-minded. And this is why I wanted somebody completely coming from outside the company and telling me where I am today and what is the art of the possible in the future.
Are you experimenting at all with digitization? And I mean this in the sense of tokenization of digital assets.
I am, but not on the tokenization piece. And the reason for that is because I today didn't have the need to do it. So to be very frank and to be very blunt in my statement, sometimes it is the investor that push you into one direction. Today, the investors I'm working with, and I can tell you, best-in-class global investors, global institutional investors, they are not asking me for that. So unless I am being forced to go down the direction of the tokenization, I don't feel the need today. Now, I understand that for other players, maybe smaller players with books, smaller than ours, for them, that piece of technology is a must. For me, as I stand today with the technology I have and the quality information I'm providing my investor with, I don't need it so far.
Good to hear. I mean, a lot of people tend to get pushed into trends without actually seeing if it is profitable for them, if it's something that should be for them, will work for their clients. It's just a trend, it's a fad. It's like a little bit like ESG, which was a buzzword for a very long time, and now everyone's having a sit down to think about actually how do we use this, properly.
So let me tell you a couple of stories here. The first one is blockchain. I left Barclays in 2018, and I remember that the last 5-10 years, so this is between 2008 and 2018, going to all the industry events, everybody was talking about the Internet of Things and blockchain. That was the new universe, and everybody would look at it, me included. Hey, I don't blame anybody. Nevertheless, nobody today talk about blockchain. The other piece is the ESG. It's so funny because today I've been in a meeting with an architect that is building our new headquarters in Spain. And I laughed so much because he asked me if I want an ESG compliant building. I'm like, hey, listen, I don't think that this is the right conversation. I need a good business case to understand if I can build it in this way or the other way. But ESG could not be the driver. It's a nice to have. And this is what I can, I'm so determined. And my people might say, hey, listen, this is not the right conversation because this is not politically correct. But at the end of the day, one of the reasons why I left banking, I left the big institutions and start working for myself is to do the right thing for my investors, to do the right thing for my client without having to be politically correct, Doris.
Fair enough. And I think it's very good for you to have just your priorities in place and in sharp focus. It always steers you in the right direction, whatever is happening all around you. All right, let's talk about your future goals. What are the top priorities this year for TWC? Let's talk about, product offerings, geographical growth, and impact.
Superb. I've been asked by one of my colleagues when he joined this project 2-3 years back. He said, why you only have one product? Why TWC is offering one product? It's just receivables, selective receivables finance. That's all what you do. And I said, hey, listen, I want to build a best-in-class experience, a best-in-class not only client experience, but also an investor experience, and show to everybody that I have the right model, and then I will start building up, new blocks. So having been successful on the selective receivables finance in Spain, with TWC, we went to the US and we launched HBC to do exactly the same. That is going to be my focus. So 2025, first priority is for me is US. I would like, US to be, my second best market. And I would like to be it, sooner or later, maybe 2-3 years down the road, my first market. So I am very much, determined about becoming the number one non-bank financial institution providing receivables financing in the US. So 2025 is about the US, no discussion about it. Second is about technology. As I said, I would like to build the future map, and this is why we've just hired recently a chief information officer. He's going to report to me, and he is a strategist, and he has been in the corporate side for so many years, and so technology for me is going to be the second priority in 2025 and beyond. And third, and most importantly, I'm launching, as I launched TWC in Spain, I launched HBC in the US, I'm launching Tamwil Capital. This is TC. It's gonna come soon to live. We are just waiting for the first funding to come over. There is some interviews I did in Forbes and other media. And Tamwil is gonna be about procurement finance. I love the concept. So at the end of the day, Doris, you finance the sales. Now I'm going to finance the procurement as well. And it's going to be a different type of financing. It's have nothing to do with the traditional, supply chain financing where you have an invoice and you pay to the supplier. Actually, Tamwil Capital is coming with one ambition. We want to be your procurement center. So we will buy the goods for you, Mr. Client, and we will hold it in our balance sheet for 1 day, 2 days, 1 week, 2 weeks, depending on your needs. And the moment you sell those products, we will purchase the invoice from you and cancel the procurement invoice. So at the end of the day, what I'm trying is to close the circle around the working capital without including the inventory. So it might be what I will call it, the inventory is going to be mine, but on a flash title. It's going to be like for a very short period of time. So it's not supply chain finance. Tamwil Capital is going to do proper procurement finance, but just procurement, but for a very short period of time.
Very fascinating. I'm hopefully we stay in touch. Obviously, the TFDI, we want to know what you're up to. We want to also be able to announce it to our members and share this information for all those who it will be profitable for. Before I let you go, and thank you very much for spending this time, we have our last segment, Trade Secrets, which is hopefully a lighthearted segment and fun questions that we can learn from you. So can you pick a number from 1 to 30?
Yeah. Should I share it with you or should I keep it in my mind?
Yes, just tell me what number. Just pick
15.
one number. 15. What have we got? What's your favorite book or movie that has shaped your approach to leadership?
Think and Grow Rich, Napoleon Hill. A very old book from the crisis of 1929. I love that book. That book changed my life. That book shaped my future, shaped my heart, and shaped my mind.
Wow. What was it about?
It's interesting because the book is mainly talking about when you want something to happen, you just need to believe in it. You should act as you are already achieved it and have a burning desire to make it happen. And that is going to change your life. And to be honest, that book is, for me, it's my my holy book. This is where I go once and again to read one of other chapter, just to get some type of energy, or I would say some inspiration.
Thank you for sharing that. I'm definitely adding that to my book list for the year, to read a few chapters and go through and gain some insights. Well, this brings us to the end of a very insightful episode of the TFD Initiative podcast. Thank you so much, Baihas, for sharing this, very invaluable insights about TWC and what the future holds for the industry.
Thank you so much for having me, Doris.
If you enjoyed this episode, don't forget to subscribe, share it with your network, and leave a review. Say something nice to us. For more updates and deep dives into the world of trade finance, do follow the TFD Initiative on LinkedIn or visit our website. Until next time, my name is Doris Kononowicz. Thank you very much for listening, and bye-bye.